Good morning, sir. I go by the name of Diary, member of Group 7, and today I'll be emphasizing and elaborating more on how inflation and interest rates shocks Ghana's banking industry. Now, let's just imagine waking up one day to find that the price of everything around you has doubled within a year. This is what happened. This is what Ghana experienced between the year 2021 and 2023, where inflation surged to 54.1%, a level not seen in over 20 years. Interest rates shot up to nearly 30%, and Ghana's bank sat right at the epicenter. Today, we examine how the external environmental reshaped Ghana's banking industry and how GCB Bank PLC, the country's largest indigenously owned commercial bank, responded to this crisis strategically. With the external environmental issue, the roots of these crises go back to years of overspending, but the immediate triggers were the Russian-Ukraine war, which drove food and energy costs up globally, and a devastating fall in Ghana's cedi, losing 45% of its value in a single year. Inflation spiraled to 54.1%, and to fight this, the Bank of Ghana aggressively raised interest rates. But then came the killer blow. The domestic debt exchange program. Banks had stored up to half their assets in government bonds, and overnight, those bonds were restructured at far lower rates. This triggered this triggered 16.3 billion in losses across the banking sector. Let's now see how the industry as a whole was affected. The industry level of impact. The industry level impact. We are using a PESTLE framework. Using a PESTLE framework, we can see this was not just an economic shock, but it had a shock in the political environment, the social environment, the technological environment, and the legal environment. The legal dimension is especially relevant for accounting students. With IFRS 9's expected credit loss model, meant banks had to recognize impairment on government bonds immediately, not over time. This turned a manageable hit into a catastrophic one-year write-off. And in terms of Fortis five forces, the crisis reshaped competitive dynamics entirely. Deposit competition intensified, credit supply collapsed, and fintechs grabbed market share. Let's now turn to GCB Bank specifically and how they were affected. With GCB Bank story, it's one of the dramatic fall and impressive recovery in 2022. A bank that had been performing well essentially forced to report a loss of 593 million Ghana cedis, almost entirely to the domestic debt exchange program impairment charge of 2.1 billion Ghana cedis. As accounting students, you will appreciate how IFRS 9's expected credit loss model compelled immediate recognition of those losses. But here is what's remarkable. By 2023, GCB had turned this around to post a record 1 billion Ghana cedis profit, net interest income. Net interest income grew 39% as the bank benefited from higher treasury yields on new instruments. However, and this is critical red flag, their non-performing loan ratio climbed to 20.2%. Their crisis had damaged their borrowers, and that damage was showing up in their credit quality. When we evaluate GCB's strategic response, the picture is now, on one hand, GCB showed genuinely proactivity, their variable rate loan book and aggressive treasury trading meant they actually benefited from rising rates on the income side. That's consistency with Tether's dynamic capabilities framework, the ability to sense change and seize opportunity. On the other hand, like all Ghanaian banks, they had loaded up on government bonds without adequately stress testing what would happen if the government restructured them. The resource based view helps us appreciate why GCB survived 180 branches and a trusted brand our resources competitors simply cannot replicate overnight. Going forward, the five recommendations we propose are all grounded in these frameworks, from the NPL resolution to the ESG integration, designed to build resilience for the next shock. And as I conclude, Ghana's banking crisis of 2021-2023 was one of the most severe macroeconomic tests in Ghana's history. For GCB Bank, it meant reporting a 593 million loss in instructive. It tells us that dynamic capabilities, skill, and brand trust are real strategic resources, not just textbook concepts. For us level 400 accounting students, there is a critical professional lesson here. Understand the accounting standards your clients operate under. IFRS 9 turned this crisis into a catastrophic one-year hit from Ghana's bank. As future accountants, financial analysts or auditors, your ability to anticipate your accounting standard interacts with macroeconomic shocks could be the difference between strategic foresight and strategic regrets. Thank you.